Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, September the 12th. My name's Eric Wilkinson. Yes, you may recognize me as the Wolfman from mainstream media. What I'm here to do is teach you guys how to implement options into your portfolio. Anybody can teach you how to build an option strategy. I go further and teach you how to implement those so that the probabilities will be in your favor even more so, and I've got a perfect example of that today. All right, let's get on with it because I'm not always directionally right, as you guys may very well know if you've been watching many of these, but I am consistent on my winnings in a sense. Anyway. Without further ado, let's get on with the economic data. Across the pond, not a whole lot to see. We did get some OPEC meeting information coming out. Those guys really are still battling it, and we're seeing crude oil suffer for that, as you can see here. Then we move over here to the United States, and we got our CPI, which is Consumer Price Index. And that comes in at 0.1%, which is in line with expectations at 0.1%. If you strip out food and energy, though, we are seeing that it uptick by a tenth at 0.3%, expected to be 0.2%, and in line with what last month's number was. Unemployment claims came in at 204,000, expected to be 215. So less claims mean people don't necessarily need to look for jobs. So this is an important data point when we are seeing job creation, not so much when we have had a stagnant economy and people fall off that unemployment number. And then finally, we got natural gas storages coming in at 98 billion cubic feet, expected to be 83 billion cubic feet. All right, let's talk about the overall markets now. We've got crude oil coming off a little bit, trading around $55 a barrel, back below that purple line and below the point of control. It's not too far away from that. Again, I've been talking about this probably till I'm blue in the face, and you guys may very well be sick of it. If so, then I'm speaking to the people that this is the first time watching the daily market commentary, okay? Anyway, we've got the point of control down here, which is acting as a magnet. It's kind of holding us in this little area that we've talked about. We've got this purple line that has acted as a soft support and resistance and continues to seem to do so. It lines up very well with the point of control. So it's actually acting as a magnet at this point. That line's been there for a while. Anyway, what we're seeing here though is a trade below $60 and above 50, okay? And I believe that we are going to see the market with it showing volume and volume coming in and fill in this so that we create a nice bell curve. So that's why I've been talking about that we are going to trade in the mid to lower 50s in crude oil. That is good for the economy because it creates velocity of money. If we don't spend our money on gas that we are really having to spend money on, it's kind of a staple in our economy, that it will allow us to buy stuff elsewhere. If I'm paying $10 a gallon more, or $10 a gallon, $10 a tank more every time I go to fill up, well, that $10 isn't being spent at Starbucks or at your local coffee shop or on a trinket for your kid, right? It's going into the gas tank. When we're able to spend it in those ancillary businesses, that creates that velocity of money, which really starts making the economy work. And that's what we would like to see right now, because we're seeing overseas a bit of a recession. Here in the United States, we don't want to see that. And one way to really avoid that type of scenario is to allow velocity of money to go in full swing, and lower gas prices are a key to that theory, if you will. All right, gold is higher on the day, but well off the highs. I mean, we were trading almost $25 higher earlier today. It was looking really good for my GLD trade, but we've since started to see a bit of a pullback in crude oil, in gold futures right now, almost near where we opened. I do expect this continue to move higher. I think that we've seen too fast come out of this gold market, and there's still some gold bugs out there willing to put some money into this. All right, bonds again down a point today. They are testing the 50-day moving average, which really lines up nicely with this 160 handle. Now, that was something that I was talking about months ago, that 160 handle was going to find a lot of resistance. Well, we peeled through that like it was butter and have then traded up to 167 and change Now we're starting to see that bit of a rollover happen here. I think it's just come off a little bit too fast. This move, I think, is ready for a bounce. Now, I would really like to see this settle above in the 160 handle, which we are only a tick or so away from that. But settling above that Fibonacci is going to be a nice win for us in our market to bounce. All right, we are seeing the volumes coming out of this, which is net outflows, that's selling pressure. But again, I think that we're going to see a little bit of a bounce here in the near future, hopefully coming into next week or a couple of days. Again, I was really close to being able to see some light there with that bounce, but we're going to have to hold on to that one. All right, we've got the VIX coming off, still in the teens, which is what we like to see, and that's due to the fact that we have the equities moving higher here. You can see the Dow Jones up 130 points. I've been talking about seeing the market come to these highs here and breach them. I think that, you know, with this bounce, we're going to see a move higher here and maybe another little pullback. But at the end of the day, I'm looking for us to come up and at least start to test those all-time highs. I spoke about this beginning of the week, that I think that it's going to happen closer to next week for those all-time highs, which is still on par for that to happen. We've got the NASDAQ moving higher again today as well, up another 61 points, piercing above the value area high. Now, a lot of times we say when we get above this value area high, here, once we get above that, we start losing a little bit of momentum. But I think that we have this as a target. You know, it's got a bullseye on it that the market wants to come up and print. And I think that we will easily come up and test this area here at 81.65. Probably next week, I'm thinking at the earliest. But that is where I think the market's going to go. The economic data here in the United States is pretty solid. It's not robust. Don't get me wrong. I'm not saying that we are knocking it out of the park right now. But what I'm saying is this is a very sustainable economic trend that we have going on, where the market is still, or the economy is doing well enough to sustain higher prices in these equities. And I think that we're going to start to forget about the fact that the European regions and stuff like that are feeling a recession, and that is then going to make us go into a recession. I don't think that we're seeing those signs at this point. And then we move over to the E-mini S&Ps, and you can see they're up 14 points, very close to these all-time highs. Now, earlier on in the week, you know, we were saying those all-time highs are coming into fruition, and we were not looking so rosy, but we've got that little bit of a pullback, and now we are looking to test those all-time highs again. You know, we are back in the 3,000, which is a psychological level that we pierced yesterday. So the markets are moving lockstep in what we expected at the beginning of the week when we were putting on a lot of these trades. All right, E-mini S&Ps. This is a 30-minute candle chart of E-mini S&Ps. The blue is a full day and night session put together. Gray is overnight, and a day session is blacked out there. You can see overnight inventory was a little bit short, came in, blasted those guys out, and blasted ourselves out. It was a very quick move up and back. Hoping we can go up there and test those again. Don't want it to really affect TLT so much, but I would like to see these markets continue to move higher, and I've been starting to cover some of those trades based on that. Let's take a look at Ulta. All right, Ulta. Now look at this. This is what I'm talking about, you guys. All the time I say, it really doesn't come down necessarily to your directional assumption being right or wrong. A lot of times our directional assumptions are wrong. I mean, we can't predict the market 8 months out, let alone a couple of weeks out very accurately. So what we need to do with options, the beauty in options, is that we can be wrong in some regards, like our directionality, and still make money. And that's what I want to preach till the cows friggin' come home, you guys. And in that, what I was talking about, October, the October contract, I sold the October 195 puts, all right? And I sold those for $1.35. I did that on the 3rd, which is right here. So you can see the 3rd. I did it right after their earnings. They still had volatility. Usually after earnings, we see this volatility crush. Well, it held on to some of that volatility because of the massive move and people flying in there to buy some puts. Well, I was like, hey, the market's already predicted that. We've already priced it in. I think we are going to see a bit of a rebound. Well, lo and behold, I was wrong on my rebound. I was absolutely directionally wrong from the 3rd till today. That directionality was wrong. But implementation, getting it in here when I saw volatility was being held on to in this market. Well, that volatility continued to come out as, there is no more news out there. We know all of the information, so volatility is going to start coming out after that move had already happened. So I sold those 195 puts for $1.35, like I mentioned, directionally completely wrong. But that volatility crush coming out of there allowed me to get out of this directional trade for where did I get out for? 65 cents. All right, so 50% of my max profit, a little bit better than 50% of my max profit, was achieved in this trade in a very short time, less than 10 days there. So directionally wrong the entire time, but the volatility coming out allowed me to achieve success in this trade. So like I said, you don't have to exactly know where the market's going to go as long as you're implementing these strategies properly. That means building them in and around these rules I've set up to increase your success. All right, so check it out. We're doing a webinar today. It's the long put, you guys. Everybody knows how to do a long put, right? You go out there and you buy a friggin' put. It's easy. Well, not necessarily. It doesn't just go lock and step with your directional assumption. There is a right trade for that directional assumption. So we will go into those details today. So I can't find a better example than what we have here for Ulta. Being directionally wrong on my assumption, completely wrong, potatoed it, but the volatility made me a genius. All right. On to Procter & Gamble. Procter & Gamble, I was doing a similar situation here where I saw the high volatility, had a directional assumption where I believed it was going to move higher, and went in and sold the September 117 puts in there, originally for 51 cents. I was able to buy those back for 15 cents today. Again, for the most part, I was directionally wrong on those puts that I had sold. I got that move. It came against me. Today I got the pop, a little bit of volatility coming out, as you can see. The volatility wasn't the key aspect of this trade. It was more theta coming out, and the theta, because it was in the September, that theta really, I think I may have said October. Those were the September 117 puts in there that I originally sold for 51 cents, bought them back for 15. So again, September has that big theta contraction coming out of it. Set myself up for success in that. Had some volatility I expected to come out. It didn't really come out, but directionality, theta, setting that implementing that strategy to increase my probabilities of success, and that worked out. Okay, so all of those things coming to fruition today is a great market commentary on implementation rather than directionality, to be quite honest. And I'm trying to get out of the gold. It was really close this morning. If we can I'll just take a look at GLD. You can see that today we popped higher. I was close. I'm trying to get out of my October 136 puts that I had sold for 22 cents. They're trading somewhere around 40. The low was 29. I didn't pay up for it. I thought we would see a little bit more of a test of that 143 area, but you can see we've started coming off. I don't think we're out of the woods there yet. I'm going to hold on to that a little bit longer and hopefully be able to get out of that for a nice win as well. All right, that's all I got for you guys. Check out, like I said, today's webinar. It is the long put, and yeah, I know you know how to go out there and buy a long put, but do you know the right environment? Do you know the right duration? All of these things are key aspects to becoming moving that needle in your direction. Okay, we're not just flipping coins here, you guys. We are basically setting ourselves up for success before we implement this strategy, and that's what I'm going to teach you guys how to do in today's webinar. So go check it out at Pro Trader Strategies. Also like us on Facebook. If you can't take that, take it easy.